Welcome to the blog for Tuesday the 7th of August. So this is day 42 of 65 of the Compound Effect Challenge. Making forward progress every single day, applying my edge and applying my method. The goal is to stick to the method, stick tight to the system that's created, and really look at applying the edge and applying those probabilities day in, day out. Be doing the same thing and moving ahead at day 65, and that is building risk models and just building a very systematic approach that's very clear and defined. Today, a trade I took today on the downside, it was a good example of that, which I'll get to in a sec, but just really making sure that all the little details are there in creating a business model in a day, a model that can go to the marketplace and be profitable. That's what it's all about. So here's the actual system, and even though these markets have really quietened down, like so trades, there's 3 trades in 2 days, which, I mean, that's still not too bad going. But I know that the trades are going to drop a little bit. In an average week, taking 8 to 10, maybe 12 trades. This week it might be, it really depends. It might be something like 4 or 5 trades. So that this sort of trade take up frequency is maybe going to half. But even in these markets, it's good to see these strategies still applying. So for me, it's about using key levels, significant points in the market, and then basing my trades around that. Now, after watching these markets the last few days, even though it's been very quiet and there's been a lack of movement, a lack of volume, what I find is in these quieter markets, these key levels or support and resistance levels, or whatever way that you find key levels, the market tends to respect them more because there's a lack of volatility. It doesn't have sort of this erratic movement where it can just sometimes just push through these levels, and because it's got time to really think about things. If you think about the market as a whole, it's seeing these key levels and really respecting them. And it's amazing at how structured, lack of movement, but how structured these markets are within the perimeters of support, resistance, and key levels and areas like that. So that's a real positive thing about slow markets. And I remember thinking this last time we had a slow market when beginning of this year, basically February and March, that even though it may appear a little bit frustrating, or you kind of want to be taking those trades and keeping that momentum up, if you really just are patient with it, and I feel like my strike rate or my expectancy of these trades is right up there, because these markets really respect key levels in the market. And it's just when I think about it, it's really all about being patient, and you can pull or come out of these slow markets just as profitable as any other sort of market. So that's the good news about slow markets. So to start off with here, just out of that there. So we've got that breakout block. So looking for the first directional trade of the day. So just putting a block basically around the pre-market data, just using that as a systematic way to go, okay, here's something I've laid out for the market. Now I want the market to tell me whether it's going to push through it and head on the upside, or push on the downside. And like I said, sometimes it can look to push down or push somewhat sort of way, and depending on what the other markets are doing, it just might look like a bit of a false move, or it's not something that necessarily it's going to go that way. Then all of a sudden it'll turn around and quite often the opposite direction. Then it is a really good one to take. So this particular one, I've got the perimeters in place. It starts pushing up, and the upside was certainly something that was definitely on the cards. When you look at this 15-minute chart here, I've started this trend line back here. It's kind of marked it here. Then it broke through it, so I hadn't actually got those 3 points of contact yet, but I kept it in there. You can see the market's really kept on respecting it. We've used it as support here again. It got above it, bounced off it. Now, end of this day and moving into pre-market of Wednesday, it's got below it's using it as a resistance. So the market definitely reacting to that trend line, or this vertical support and resistance area. So overall, all that says to me is watching that, keeping an eye on that, going, there is some pressure on the upside. So I was keen for an upside sort of trade, but still nothing in this particular area, because that's only an overall view for me. What's important for the setup is, for one, it gets outside the block or the breakout block, and then 2 is that there's support there from the other markets. And when I was watching the other markets, say the Russell, you can see when it is getting through. So at this stage here, if I was really convinced, so here it's pushed out 4 ticks. If I was convinced, I'd buy off it here and then look for it to continue. Eventually it has, but it would have actually pushed through and stopped out. But regardless of that fact, you can see, looking at the Russell here, it just wasn't supporting an upside or a downside move. It was just there's nothing pushing that up direction yet. So for that reason, and even this area here when it was coming back here, would have put on the order there if I believed that it was a good spot to buy from. But again, the other marks weren't supporting it. Eventually, it's come back and touched the block order, and then it's gone. But by then, I'm not having the order on then, because again, if you look at the Russell, it's breaking down, pushed up, breaking down again. If I'm leaving it on there too long, in my plan, I'll stipulate how long I'm prepared to wait for it. By the time it's getting here, depending on other market action, but I believe it could be getting some movement and pushing through this level here. So there's certainly an opportunity there to take it. And in previous days, I was prepared to put the order on, but this particular day, never had the order on, even though at certain stages there it could have got filled. Never had the order on because the other market didn't support, and that was even with the fact that the 15-minute charge was showing the upside. Unless I get that support from the markets, this particular trade, I'm not prepared to take it. That's the way it is. It's systematic, and I'll leave it that way. So the markets come back here. We're pushing up through here, so this is an area obviously where I look for a breakout trade. Again, I haven't even got an arrow there pointing to it as far as an opportunity, because for me there was no price there for me to place an order on. I look for a price action area around here and look for the other markets to show me what they're doing. In this particular case, it was the ES that was leading the upside, and normally the Russell and Nasdaq will lead through and be the first ones to break. Occasionally, probably 1 in 10 or even less, the ES will be the one that actually leads through and is the first one to break. So when a situation happens like that, I'm not saying that it won't break through. I'm just saying for me, it's not an area that I'm going to trade, because it's going a little bit different to the way it normally does. So it's not in line with my system. So for that reason, no trade there for myself. Moving on up here, we're starting to get some rounded formation. So up here, you can see momentum starting to fail on the buyers, with the buyers looking for some sort of reversal or directional setup to the downside. Now this is a particular area based on a system where it's important to stick to what you're basically creating for yourself. So we talked about this area in the trading room. For me, I wasn't so sure. It was still an area that was very sideways, lacked momentum. But the fact was, the actual setup was there, even though it was one with not a heap of pressure on the downside. The formation was there. And then if I go to the other markets and I'm getting pressure on the downside and they're breaking, then all there is left for me to do is take the trade. I'm not there to decide whether based on momentum it's going to work or not work. I've just got to take it. So I'm sitting there in my mind thinking, is this going to work? And in the end, it was just like, well, based on, and I'm talking to myself, going based on what I've learned, it's the model decides for me, and the model says there's a trade here. At the end of the day, it doesn't matter whether it wins or loses. It's based on, there's going to be losing situations, but what I need to understand is that it's setting up, and this is an area that I normally take. So I took it, and area ended up working quite well. And this is the confirmation of it here. So here's the Russell. So here's that same support area on the Russell through here. You can see the Russell well and truly breaking down through it. So there's certainly some pressure or momentum on the downside there. And and you can see on the 1 minute chart. So this is the area here. So there's good support there. Once it got underneath it, so I'm not looking for it to break the first time. Once it broke, then put my order back on that area there, look for it to come pop back up, get me, and away it goes. And eventually it did. The other fact is too, there's good resistance here. So I actually need to break resistance to stop me out. So a directional trade there. The thing about this particular one too is we spoke about in the room, once it started breaking down, and also there's a 5 minute fade coming up here. So I'm not looking at this 5 minute fade because it's not based on any key areas for me. If I'm taking any 5 minute fades or 5 minute trades, I need to be based around these predetermined levels I've already got in the marketplace. So there's no key area there for me. And from a discretional point of view, it looked like an area could potentially get a bounce. But once it did start breaking down through this bit of a swing low here, it was obvious that the market wanted to start heading down. And what I actually did is I've started from doing research as far as what we spoke about with risk models. Talking about risk models, looking at taking some contracts early, some contracts letting them ride. So what I actually did with this trade, and I'm starting to implement some things that I've learned just through research and through gathering data, is take some trades out, contracts out, and I think a good time to apply it for me now is early on. Is during these quiet markets when the market doesn't move as fast. So I'm taking contracts out at 5 ticks. So for example here, I'm in at this where I am in here. So I got down, it got to 5 ticks. It's popping up. It's getting a bit of support. So already I've got some contracts out at 5 ticks, knowing that even though this trade hasn't gone to a break-even stage yet, I'm already in a situation where I'm at break-even because I've taken some of my contracts out, or close to break-even. I then took some more contracts out at my normal 10, most of my contracts out at the 10 tick, and then I'm going to let some ride. What I want to do is create a situation where I'm available to gain or cash in from good luck. And what I mean by that is, sometimes some of these trades we take to just keep on going and going in one particular direction. Now you want to be careful that you're not just always going for more and more and more, and as a result keep on getting stopped out for break even. But some of the contracts I'm prepared to let them run till next support resistance levels. And in the market, in the trading room, we spoke about, for me this was the next key level in the market. I thought once it started breaking down, it was an area that I was looking to go towards, and eventually it has got there. Pretty much to the tick, and that was certainly what this market's had in mind and doing. But for myself, I looked, originally had it down here at 96, or what I do is take the key level, come back a point, so I don't want to ride it all the way to the key level, I want to give it a bit of room. So I had 97 as original key profit target. I then actually reduced that to 98 because I looked at this swing low here and I thought we'll just go back a bit from that swing low at 98, and it's got to it there, then popped back a bit and then continued down. So this particular one I've got out at multiple points. I got out at 1R, 5 ticks, got out my normal 10 ticks, and I got out at 14 ticks based on a predetermined profit target. But anyway, that's just something I'm doing with my own account as far as risk modelling, and but based on some research that I've been doing. But that's a wrap up for the day. I mean, as far as it's going, you can see up here that it's the first winner. I had the 2 losses yesterday, but if you put yourself in a situation where you're looking at a 2-to-1 ratio or whatever you design through your risk modelling, you want to put yourself in a situation where you can really profit from these markets and make it as easy as possible for yourself, is what I'm trying to say, I suppose. And in a situation like this where I know I've got it wrong 2 times and right once, so I've got, for example, 33% strike rate this week, already back in front as far as ticks are concerned, because that's the sort of thing that you create through risk modelling and designing with profits, exit targets and things like that. So it just becomes, the more and more you look into it, it's just an absolute vital part of trading, and the more you start to realise that it's just not about the entries. I mean, a good entry is important, always say that, but what's more important is how you manage the trade. And today for myself was just a confirmation of that. The actual entry I wasn't so sure about, but at the end of the day I just took it because the model says to take it, and I just got to have faith that overall I've picked this area as this area overall will work, but then what's more important, how I manage this overall area will work for me as well. And once I sat back and really thought about that, thought, well, there's just no decision as to whether I do or don't take this trade. I just get in it. I've got my predetermined risk, and then if it starts going in my way, I continue to do what I do through what I've learned from researching this particular area and finding the facts based on actual real information. Anyway, guys, I'll leave it there. We'll speak to you Wednesday.